Hey Bulls and Bears, what is happening? Back with another dose of economic reality. JJ here, you're watching Bull, Boom, Bear, Bust. Today is July 19th, it is Wednesday, it is 2023, and I'm sorry that I missed you guys yesterday. I've been pretty busy. What we're doing is we're prepping an older vehicle that we have to put up for sale, and we thought about taking it to a dealer and getting a trade-in, even though we already bought a vehicle. We bought a new vehicle last week. And I did a video on that. Actually, that video is no longer up, but I did a video on my experience. For those of you that watched it, you know, you saw, you know, what I did. But I was getting a vehicle prepared to sell, and I can't believe the cost of detailing. Right? We'll talk about that in a few minutes. Let's get into the big story here. A lot of news to catch up on since I missed yesterday. Gold being announced, a new gold-backed currency being announced out of the BRICS nations here in August. That's next month, obviously. There's headlines such as this: the U.S. dollar will die. New currency being implemented, backed by gold. Some very big gold advocates are out there saying this is the death of the dollar, that this is the gold-backed currency that we've been waiting for decades. I'm not so optimistic, right? And not to be a negative Norman or anything like that, but if something sounds too good to be true, it probably is. So when you look at these countries that are involved here, we've got China, we've got Russia, just to name a couple. Do you think the governments of these countries are honest and they want to bring back sound money and make everything fair, and they won't have unlimited spending for war and all the other things that governments like to spend money on? I seriously doubt this is the moment where the currency is going to be 100% gold backed. Now, do I think that gold's going to be part of the trading amongst these different countries? Absolutely, it already is. Not on a very big scale. I think it's going to become more prominent, though, within the global trading system. But to say that this is going to be the new gold-backed currency that's going to be redeemable, and by redeemable I mean someone will be able to take their paper note, because we'll still have paper money, and turn it in for a measure of gold. That means 100% redeemable. I don't think so. I don't think these leaders of these countries are necessarily the good guys. Many would people say they're the bad guys, you know, that they aren't looking out for interests of the people. And we see many different countries across the world now revolting and undergoing economic collapse. The news has pretty much hidden it from the people here in the United States. So the people in the U.S., most people don't realize what's happening globally, but I think it's coming here to the United States, and it'll happen all at once. Things seem really good up until they're not. You wake up one morning and they announced a bunch of huge bank failures. We've only seen small bank, well, actually not small. We've seen some pretty good-sized bank failures, but because it didn't impact the bulk of the population, you know, most people didn't panic about it or didn't really realize that it was a big deal. But you'll wake up one morning and the collapse will have begun, and it's going to be obvious to everybody. But here's what's being announced here. Here's a report here out of the embassy in Kenya. The BRICS countries are planning to introduce a new trading currency which will be backed by gold. More and more countries recently expressed desire to join BRICS. So there's a few different reports out there similar to this one saying a new gold-backed currency, a new gold-backed currency. This is a game changer. But they don't give the actual evidence. They give what a couple people said, or what they said they might do, or what might happen, but no actual 100% concrete proof. Now, many people will argue that nothing in life is 100%. But just look at the basics. If it seems too good to be true, it probably is. Do you think these countries want sound money, want honest money? Do you think they want to lose the capability of just creating, like I always say, trillions of dollars at the click of a mouse? Of course not. There's certain people in certain positions that get very wealthy because of this type of system where you can just click a mouse and create as much money as you want to now and send it wherever you want to, including special interests, insiders, people well connected. I think most of you know the game. It's pretty obvious by now. We'll have to keep an eye on that. The announcement is supposed to be made during a summit between August 22nd and August 24th. So it's a multi-day summit, and if it's true, it will have dire consequences for the U.S. dollar. And that's one of the reasons why I went out and bought a vehicle now, even though car prices are finally starting to come down, and some people say the bubble is finally bursting. One, I got a really good deal. Two, this dying of the dollar, if it happens, it's going to be very rampant inflation. And also, if we see supply chain disruptions in the chips, countries like Taiwan, you're going to see rampant inflation. And other things too, supply chain disruptions, rampant inflation. All right, so let's get into some other news here. There's a lot of other stories I want to get caught up on here real quick. Let's go over to the UK. Headline, CNBC, UK inflation slides to 7.9%. So that's actually a reduction from previous months when you look at the year-over-year number, and it's looked at every month. Below expectations. So that's great news that inflation's only up about 8% year over year. And let me try to put a scenario out there. Not a scenario. Let me try to put a analogy out there for you. So let's say you go out of town for a couple days, you come home, you find that someone broke into your home and they stole a lot of stuff. And you add it all up, you report it to the insurance company, you find out that they stole or took about $20,000 worth of stuff. They took electronics, they took, some of your coins or silver coins. They took a lot of stuff. It was a bad situation, about $20,000 worth of stuff. And then next month you go to the grocery store, you come home, and you find you've been robbed again. But this time they only took $15,000 worth of stuff. But if you're the news, you're celebrating, woohoo, woohoo. Only $15,000 was taken from us this month. It's better than last month, because remember last month we got robbed of $20,000. Now it's only $15,000. Isn't this good news? Things are improving. Wow, the stock market's going to shoot up because this is a wealth creating situation here. Completely insane nonsense. Prices are still up. There's a couple spots where prices are coming down. Overall prices, the cost of living are going up. Just ask anyone who's bought car insurance or paid for car insurance, home insurance, food. I'm not seeing too much savings in any of those categories. Car prices have nudged down. I believe it's about 5% year over year when you look at the used car market. Home prices down in some areas, still up in other areas, and still going higher in other areas, right? So not major corrections happening at this point. Will we see bigger corrections? I think so, unless something drastically changes with the global economy. We're talking another 2020 pandemic situation, lockdowns, where they re-implement rescue programs. Nobody can get foreclosed. Nobody can get their car repossessed. That type of situation. Other than that, I think we're going to continue to see more corrections. Let's go over to Wolf Street here. Nice report here out of Wolf Street, Wolf Richter. Our drunken sailors are still at it, splurging online, buying cars and eating out. And let me just give you the beginning of his article here. Retailers have a problem. Prices are no longer easy to jack up. Inflation shifted to services last year, where it still rages, but inflation in goods has cooled, and goods is what retailers sell. Gasoline prices have plunged. Food prices month to month have leveled off, and this year even dipped a little bit. I haven't really noticed that. Let me know if you have seen the prices dip. This is what he's reporting here. And durable goods prices are up less than 1% from a year ago. And I've said this from the beginning. We're bound to see some sort of reaction from the tapped out consumer. Not everybody, but a lot of people are tapped out on their credit. They're barely making their monthly payments, and they're starting not to be able to make their monthly payments, for example, on credit cards. And that's why we're starting to see bankruptcies tick up again. We're starting to see the increase. A lot of people were rescued in 2020. Savings actually jumped in 2020 with all the stimulus, with the cancellations of the payments. Some of those payments are being resumed now. For example, student loans. We've got a lot of students that are going to be in big trouble and probably canceling their lease on their apartment or moving out of their rental and moving back home because they're going to have to start making these student loan payments. Carvana, let's talk about Carvana. As many of you know, I bought a car through Carvana, and it was a pretty good experience. And I was a big Carvana skeptic for a while, but it was the best car buying experience I've ever had. I didn't have to go to a dealer. I didn't have car salesmen follow me around the car lot. I've had a 7-day evaluation period to drive the vehicle. Took it to my mechanic, checked it out. It's a great experience. Did everything online. Didn't have to call anyone on the phone, talk to anybody on the phone, or interact with any live people except one person, the delivery guy, the guy that dropped the vehicle off from the the big tow truck, the car hauler. That's the only person I had to interact with. Carvana though got as low as $3.55 per share. We reported on it right here. Many of you bought the dip. I've got several messages that you bought the dip, and now it's up to over $58. So that's a heck of a trade. I doubt there's many people that held all their shares all the way up to this. People that bought that dip. But if you sold some on the way up and you still have some, that's even better. So we'll have to see. Carvana, will they be impacted when car prices go down more? We'll have to see. But right now, that was a very nice trade. $58, I probably wouldn't buy more shares at this point because I picked up some about $6. But we'll have to see how that goes as well, with the car market and car prices coming down, especially used car prices. Bloomberg, more Americans are getting turned down for loans, and that's per Fed data. So the credit crunch, is it finally here? If it is really here, if it's really harder for a lot of people to get loans, then you're going to see bigger price corrections and hopefully a lower cost of living. Now, I think there's other areas that even if we see price corrections, there's other areas where prices are going up even more. And I'll go back to insurance costs, home insurance, car insurance, pretty ridiculous. So we'll have to see how it plays out. But the credit crunch is very important because we saw in 2008 it was a credit crunch that was implemented very suddenly because of the bank failures and the failure of all these mortgage lenders to begin with. It began in the subprime market. This time it's playing out a little bit differently. We've got commercial real estate basically crashing right now. That could be the leader as far as this next collapse, this next economic collapse. Commercial real estate could very well be the canary in the coal mine, or the leader. CNET, talking about student loans here. 1 in 5 student loan borrowers face monthly payments over $500. And last I checked, there were over 43 million people with student loan debt, folks. That's a lot of people, and a $500 a month payment added on top of everything else, where people are already maxed out on their credit cards or close to being maxed out, or getting further behind every month. This is not a good thing, and it's only going to accelerate the economic collapse. Housing Wire, U.S. Bank imposes mortgage layoffs, right? So we're told that the housing market's rebounding, that the bottom was in, that that tiny fraction of a percent of a price correction, that's the bottom. That's what many of the news outlets are trying to convince us here. U.S. Bank imposing mortgage layoffs. So we're still seeing more layoffs, which indicates demand is still really low for mortgages and refinancing. Could they drop rates and change this whole thing? Absolutely, but then they have the inflation monster to deal with, and they're going to face repercussions if the inflation monster gets much worse than it already is, and they ended up dropping rates, right? So they're definitely in a tough situation here. Another article out of Bloomberg, a $500 billion corporate debt storm builds over global economy. That's something we haven't talked about here, is this corporate debt. We have many zombie companies. I read as much as 25% of all companies out there in the U.S. are zombie companies, meaning they're not earning enough to even pay the minimum payment on their debt. That's known as a zombie company. Other reports said it's even higher. But so that, in addition to the commercial real estate, that could be another shoe to drop about the same time. Because remember, the commercial real estate, the vacant buildings, that's only going to have overall negative impacts on the economy, and more people losing their jobs, especially around the city hubs where these big corporations had these big office buildings. A lot of businesses and restaurants around those areas are reporting a huge drop-off. So it's going to be a lot of layoffs for those people that worked in those areas. Go up to San Francisco. Video shows San Francisco Walgreens chain chaining shut their frozen food area, their freezers, after 20 incidents of shoplifting and thefts in one day. 20 incidences of one day. And the video shows a freezer with a chain and a padlock on it. So that's San Francisco, and that's also a lot of larger city areas across the nation. A lot of crime, a lot of poverty, a lot of people living paycheck to paycheck, and you know, being forced to live in a tiny apartment and paying enormous rents. It's just the insane cost of living is affecting everybody, and of course you're going to see crime get worse. How can crime not get worse with everything? So bottom line, folks, that I like to stress on this channel is be cautious, be safe out there, keep stacking. What I mean by that is have at least 30 days food, emergency supplies, water, living expenses. Have some cash out of the system. Have some items that are barterable, because if this thing comes down just like that, you can see it overnight. Let me get a better snap. I can't snap. Alright, anyways. If this thing comes down hard and fast, you're going to wish you were prepared. But don't put all your eggs in one basket. Don't live in fear. Live your life. Take vacations, spend money, travel. Do what you like doing, because sitting and hiding in a bunker somewhere for the rest of your life is no way to live, for lack of a better term. I think most of us can agree on that already. Alright, everybody, thanks for watching. We're going to wrap this up. Keep stacking. Big love. Bye for now. Peace.